Good morning and welcome to today's morning report on Friday the 5th of December with me, Rich Perry, market analyst at Hantech Markets. It is Non-farm Payrolls Friday today, and the markets have actually started fairly positively. This is actually quite abnormal, actually, to be honest. Usually on Non-farm Payrolls Friday the markets will be fairly cautious. Pretty much equities would normally be flat, and currencies also flat as well. Currencies are broadly flat, to be honest, though, with a slight air of dollar positivity, certainly against the yen anyway. But markets are strongly higher. Stock markets have reacted very strongly since the open, taking back a lot of the losses that they saw yesterday, actually, and that sort of come after the losses initially came after the market sort of perceived the ECB's press conference by Draghi as not really being urgent enough, and not really delivering on potential moves towards further monetary easing. But then after the market closed and towards the end of the US session, there was a rumour that came out around the fact that maybe Draghi was thinking potentially January being when these easing measures would come into place, sort of making it more dovish than potentially it would have been during that press conference. So markets have reacted strongly higher. DAX 1.3%, FTSE 0.7% higher. DAX is my chart of the day, and I'll talk about that in a little bit, so we can take a look at that in a closer detail. But we move pretty much swiftly on to Non-farm Payrolls Friday today, being the main focus of the day. Now, what we have got is the dollar, as I said, just stabilising on Non-farm Payrolls Friday after this fairly volatile move that we saw yesterday, and that came obviously with the rebound that we had on Euro, especially. Euro very strong yesterday as a rebound. And I think the dollar has slightly stabilised today, but non-farm payrolls are expected to come out at 230,000. Now we have been above 200,000 for 7 months in a row, and that would be an 8th month in a row above 200,000. So that's a very strong set of data there. But the main focus that we need to be looking out for on non-farm payrolls, I believe, is this average weekly earnings figure, because the Fed is looking out for this for wage growth to be one of the main drivers behind when they start to move towards tightening. Now, average wages are currently around 2% on a yearly basis, and the expectation is for today that they will grow by 0.2% for November, and that would be 2.1% for the year-on-year growth. So the Fed is looking out for this number, and that is an important component from this non-farm payrolls report. So if we start to see wages growth coming through, then the dollar should strengthen on the back of that because of the tightening implications that it has for the Fed. So that's this afternoon. So that's the non-farm payroll data. So that sort of takes me now back to the DAX, which is my chart of the day. And what we saw yesterday is this big correction in the DAX. We actually had a correction from an all-time high of 10,084. That subsequently could well have been a false upside break, which into an all-time high, into a new all-time high ground. A false upside break could potentially be very bearish. Now, what we have seen is the reaction higher today, 1.3% higher, but look how much of the candle it's still yet to break above. Now, that 10,084 level is a key resistance on the DAX now. If it doesn't take out that resistance, then there is certainly the prospect that was a false upside break, and we could well be in line for a bit of a correction on this DAX. Sorry, excuse me. On the DAX. Now, what we have also got is an RSI sell signal where the RSI has moved above 70, rolled over and crossed back below 70. That's your classic sell signal on the RSI, but ideally it would be coming around with other sell signals on the momentum indicators. The MACD lines have come together and threatening to turn lower and cross over, but not yet. Stochastics have turned over, but not given the confirmation sell signal yet, which would be below 80. move below 80. So there are a few signs that potentially this rally could be coming up for a bit of a correction, but not entirely yet. We've had this rebound today, and it'll be interesting to see if this rebound can go back above that yesterday's high of 1084, and if it doesn't do that, then I would be starting to get a little bit concerned that perhaps there will be a correction on the way. So that's your DAX trade today, and I wish you good luck in your trading throughout the day. Don't forget, obviously, non-farm payrolls 1:30 this afternoon UK time. Could be a volatile one as usual. Anyway, I wish you good luck, and I'll speak to you later. Thank you.